Morning, everyone. Welcome to another episode of Trade Bitcoin with your host, Owen Vase, coming to you live from London. I'm just swinging by here for a couple of days, and I am off to Singapore this weekend. So I will see many of you at the events over in Singapore. There's like 3 conferences going on. I'm not speaking at any of them. I have passes to all of them, but I'm not speaking to any of them. So I'm not sure which days I will or won't be there, but I am headed to Singapore from. Okay, I was going to keep taking some time off. Wasn't going to do a video, but I saw that the price had dropped. I wanted to take a look at Bitcoin, so might as well do it on a live stream. So let's go straight to the charts. I'm going to try to keep this one short. All right, here's the monthly chart. The monthly chart is interesting at the moment. It's on a red 2 of 9 using Heikin-Ashi. Now you can see that on the monthly chart, once the sequential numbers turn red, they tend to stay red for a little while. We saw it here. We had 1, 2, 3, 4, even though the price had already kind of bottomed, but it didn't get us out of the bear market, and the bear market continued. This was just a 1 candle price flip, and then we went back over, but this was the year-long consolidation. So the one thing Bitcoin has never done is it has never gotten below its 200-month moving, it's 50-month moving average. And we came close to it once again, but now we are way above it. So there's actually plenty of room to the downside without endangering anything. The reverse points, of course, here are positive. You can see that my expectation of the future price of Bitcoin is not exactly aligning with what's happening now. Now, I put this in, early in the year, back in May, probably before that. And let's see what happens. I mean, if we consolidate here for the next year or two, we could still come in line with what I expected. I did expect us to have, a catastrophic capitulation around this time of the year. So I was looking for a bottom around this time, but I was looking for it at a lower price. So we'll see what happens from here. For now, the monthly chart is leaning bullish, but it's pretty mixed. We're leaning bullish though. Here's the weekly chart. The weekly chart is still on a green count, but here's the important part. The important that while it's on a green count, other than buying the 9 itself on a weekly scale, a bullish trade from a longer term continuation trade has not been activated. You need a new higher weekly high, and that did not happen last week, and that is not happening this week at the moment. Now I want to lower this to the top of this week. But today's Friday, so there's still 2 more days, and Bitcoin is so unpredictable that it can certainly rally over the weekend. It's unlikely, but it's certainly possible. So I'm going to leave this line here for now, but I will lower it. And that means that in order for me to have been a bull this week, I would have needed Bitcoin to break 10,000. In order for me to become a bull next week, I would Bitcoin to break whatever that line is. Where is it? 9,600, right? So if we go above 9,600 next week, I become a bull. Now, at which point do I become a bear? Well, because right now I'm still neutral. I become a bear. I can't become a bear this week unless we fall significantly lower. And I do mean significantly lower. Oh, interesting. We're still working on a deferred 13. Huh. Okay, never mind. So when do I become a bear? Well, we are now once again below the 38% Fibonacci line, but that Fibonacci line may not mean all that much, right? It's a Fibonacci line. Which is that? It's a Fibonacci line from up there. Oh, that might be backwards. I gotta double check my Fibonacci's. Hold on. I think that Fibonacci line is backwards. Hold on. Is that it? Yeah, okay. Yeah, the Fibonacci line is backwards. It should be like this. Oh, but then I don't have extensions. I know I did that. Oh, I definitely need a magnet on this one. Yeah, there we go. There we go. Okay. So I'm going left to right. So that's actually the 38%. But they're going on the way up, so that's actually there. Those Fibonacci lines are actually irrelevant. This should be here. And this should be there. This is what I actually should be looking at. Because we've now established a new low, and we now established a new high. So these are actually the, oh, but now it's backwards again. Okay, I see what happened there. Yeah, because that should be the 30%. Okay, I got it. I'm actually not looking at the live chat, but yeah, the unfortunate thing is that I can't get my extensions up. And that kind of sucks. That's okay. There. This is what it should be. So according to this Fibonacci set, somewhat perfectly off of the 61% retrace. And now we're stuck at this 38. There you go. There's your Fibonacci set. Thanks for the tip, Alexander. No, they didn't know that on the flip of Fibonacci. Anyway, so when do I become a bear is the question. Excuse me. I think I muted in time. So the question is, when do I become a bear? So I become a bear in 2 weeks, assuming we keep going lower, right? So the next candle will most likely, oh wow, it may take a little longer actually. So the next candle is more likely to be a green 4 because unless we start falling below 8,300. So I need a red price flip and then a red 2 going below a red 1. Now, in a perfect world, that would happen around 8,400. So I really want consolidation for like 2. But look, the longer we consolidate, the closer we get to the halving and the more bullish I become. But for now, I still think it's possible for us to go below 7,000. And until I see significant positive developments in Bitcoin, I'm going to remain skeptical. Here's the daily chart. The daily chart is the one that actually gave you a trade today. I mean, I wasn't paying attention. I'm not actively trading, but you are. See this candle right here? That's a red 2 going below a red 1 and breaking a very critical 200-day moving average. This is very bad. It's very, very bad, right? Look, the last time we broke the 200-day moving average, we didn't go significantly lower, but we went lower, and we stayed below this moving average from September 26th. We'll say to here, right? Till October 24th for a month. Whenever we fall below the 200-day moving average, it usually doesn't like immediately go back over, right? Like here, I mean, that was the bear market though, right? Like, Like once you fall below this moving average, you don't just like, I mean, here you just closed, but then you need a full candle. Like I don't consider a breakable moving average until there's full range of a candle below it, right? Like kind of like this. Yeah, I guess this one went back over. So it happens. But this was an overshoot, right? This was a giant fall. It wasn't consolidating at the moving average. This is a very bad sign. And you still have the short-term moving average, but that almost becomes irrelevant at this point because Bitcoin is really respecting the 200 and the 128. 128 is about to cross below the 200, which is a monster death cross. That's pretty bad. That's the 50-period moving average, and it hasn't really been respected. So this is a very bad candle. Unless Bitcoin rallies in the next 24 hours, this is a bad sign. And according to sequential, the short trade could have been activated right here. 2 going below the red 1, and as it breaks a very critical moving average. In fact, you could have jumped the gun a little bit and got in on it a little bit early because of the break of the moving average. And there is a parallel channel going on here. I'm just not going to draw it, but you can see the parallel channel. So if I simply extend that trend line, you know, that's a reasonable low sometime in November, below 7,000. And I think if we fall below 7,000, we're going to go significantly lower. Don't rule out. I mean, I'm not ruling out 5,000 or lower until probably April. So as long as it's not April yet, Bitcoin can still fall to that $4,500, $5,000 range and still be in a reasonable overall, you know, strong position. Some miners may go out of business, but that's about it. All right, let's move on for the lower level time frames. So I'm not going to bother. I'm not going to bother with Ethereum either. Is this even the latest price? I don't know. I got about 5 minutes left, guys. Gold. Oh, this is interesting. Gold. Oh, it's not good. I don't like it. It's too dark. It's better. Gold is not looking good at all. It's looking like a disaster. I wouldn't be in gold now. It gave you a completely bearish posture. I mean, if you bought into gold at 1380, which was a reasonable place to buy, you're still, but I can certainly see it pulling back to 1380, and then it's a make or break time for gold. If it goes lower, then it could potentially still go to new lows. If it bounces off this, then it'll probably go to new all-time highs. I'm still skeptical. Oh wow, look at silver. Silver just made new low off that 9. I really thought that it played out the clearly not, right? So the weekly and daily, and I mean that was a huge alignment of 9s on silver. It's a weekly 9. What was the monthly doing? Nothing. That was a weekly 9, and inside that weekly 9, we had a daily 9. So there was a daily 9 inside a weekly 9. I don't really want to look for lower level timeframes. And the daily 9 was preceded by a combo and sequential, which is yes. And here's one more 9 at the high a few days ago. Man, silver's in trouble. Broke its TDST lines. Yeah, silver's done. I would not want to be in silver now. And it's only a red 1 on a weekly. I think I was very skeptical about precious metals completing the bear market. I was skeptical, and I'm still skeptical. To zoom out on silver, you know, all you did was make a lower high. Like, you still haven't broken out above the last swing high at $21. So, you know, as cool as it looks, hey, silver just went from $14 all the way to 20, which is a nice 33% rise. It means nothing if silver goes back below 14 sometime in the year 2021. So I'm not ready to call the end of the precious metals bear. It's like I'm not ready to call the end of the Bitcoin bear market. It's that simple, right? Like, the charts are telling me to be careful. Look, I would rather buy into silver at 25 and ride it to 100 than buy into silver at 15, ride it to 20, and then watch it go to 10. Like, I'm okay with this. So I'll wait. I'm not sure. As a short-term trader, yeah, there were definitely, you know, opportunities. As a short-term trader, it would have been hard for me to time it. As a short-term trader, I didn't have a 9 at the low. Maybe the daily chart did. Oh, daily chart did not either, right? So as a short-term trader, I would have just shorted that. I didn't have an opportunity to buy in, but I would have shorted that. You don't always have to make money on the way up, right? You can also short the top. And when an asset, you know, shorting is not a bad idea. In Bitcoin, it's dangerous, but in other assets, it's not. S&P. I'd be careful with this daily 9 right here. Now, the weekly is still clean. The weekly is still saying we're going higher and higher and higher and higher, sky, you know, to the moon. But I'd be cautious on this daily 9. I'd still be cautious, and the 13's coming. Very possible that this could be a 999, and that would be great, actually. I would still be cautious. And maybe 6 more days of upside, and then you're gonna have a 913 here. Because, oh, that's the 9 from that. This is the 13 from this 9. And that is the, so this is a 13 from the 9 over there. Going to be the 13 from this 9. That's the important 13. So the next 13 may align with the next 9, right? If we consolidate for another day or so, but keep the count going, we could have a 913 coming up next week, which would be very interesting. Very interesting. Right now, I'd be cautious, the stock market. I'm still leaning bullish, but I would be cautious. I don't really want to go through stocks today, guys. So I'm going to skip that. Bitcoin dominance. I don't think I have that chart. Oh, I got about 3 minutes left. I can pull up the chart. I can't pull up the chart. I don't know, something's not working. Look, your confidence is patched over. Don't think so. Not under 5,000 ever again. See, the difference is, I'm looking at your comment back, Tovin, and you have a YouTube profile that doesn't even have an avatar. So that tells me you don't have a YouTube channel. So I can't say Bitcoin under 5,000 ever again. If I'm wrong, that's my reputation. When someone, I mean, like, many people can say whatever they like, but if it happens and they say this can never happen, this will happen with 100% certainty. I mean, nothing is 100% certain. Bitcoin can die tomorrow, right? The probability of Bitcoin going to 0 is not 0, and it's not trivial, right? Like, it's significant. Bitcoin can fail. Bitcoin can fail 3 minutes ago, and we don't know it yet, right? So assuming that Bitcoin will never go below 5,000 ever again is just, I'm sorry, it's silly. It's completely silly. Bitcoin can also go to $100 and still recover and go to $1 million in the future. So you can't assume anything. All you can do is properly allocate your funds. All right, let me try this one more time, and then I'm going to close up. Bitcoin dominance isn't really relevant. It's going to go back to 98%. The free market will make it so. The only way Bitcoin dominance is not going to go to 99% is if there is some kind of a law saying that you have to use Litecoin. There has to be a military force or a government force to force you to use an altcoin. That's the only way that Bitcoin dominance isn't going back, to 95 and above. That I am very confident in. And Bitcoin dominance is way more likely to go that high if there is a monster crash in the market, right? So if Bitcoin falls to like 1,000, then the altcoins will fall to like pennies. So Bitcoin actually has a higher chance of reaching 95% Bitcoin dominance at a lower Bitcoin price, not at a higher Bitcoin price. Yeah, so Bitcoin dominance is just not interesting. Hey guys, if you want to, let me show you something else. If you do want to support I do want to show you something. If you want to support my work, please check out the affiliate page. I have a couple of more things on here. Please check. Cost you anything to register for TorGuard or TradingView or eToro or LVL if you're a trader in the US, Bybit, Deribit if you're a trader outside the US. Kraken is, I believe it's both US and non-US, but check them out. It's a way to support content creators without paying. This is what I was going to show you guys. So we got some awesome update. The sequential code. My web developer is loving this. So he was just able to time this ridiculous trade. So the new version of the sequential code will show you if your asset is hitting 9s across other time frames. So right here, this happens to be the Nifty, and my developer trades Nifty because he's out in India, so he's resorted to trade Indian markets. And right here, it tells you that, hey, so you're looking at the Nifty on a 10-minute chart. This is earlier today, by the way. This isn't like history. This is November 8th right here. And right here, you have a 10-minute 9, but it also happens to be on a weekly 9 and a daily 9. The trade didn't materialize into anything great, but then it happened again the following day. And now your weekly 9. You had your daily 9 yesterday. That was the one-day 9. The one-day 9 was there yesterday. The weekly 9 is there now. And then there was a 4-hour 9 and a 6-hour 9. And this is the 10-minute 9. So he was able to short the 10-minute 9 right there and had a very nice trade. So this will allow you to look at sequential across and that's one of the new upgrades. And there's an even cooler upgrade, right? So here is, again, you can look at sequential across multiple time frames on the asset here. And then there's another section here. And this shows you what all of the sequential parts are doing. And these are some of the new upgrades. This is going to come out when I get back. When I go to the US, I'll just spend a bunch of time to make sure it's working right. So here you have the combo 10-3. So these are all of your countdowns, right? So right here, you have a 5 sequential, but it's also an aggressive 8. And this one is a combo 10 and a combo 3, combos in the background, and an aggressive 9 and a sequential 6. So it'll show you all of them that are showing up. Very, very useful. And this here, this is one of my favorites actually. This is looking at sequential cross assets. So you can list up to 4 assets. So the one you see here, so here's Bitstamp, right? And this tells you that there is a 9 sell on Bitstamp. But this also tells you that there's a 9 sell on Gemini and Coinbase and BitMax. But this is an interesting one, right? Like right here, your Bitstamp was only on a 5. But this tells you that, hey, Gemini and Coinbase and BitMax, all of them were on a 9. And you don't have to use all of them like, you know, different exchanges for Bitcoin. This could be Amazon stock, and this could be stock, and this could be S&P 500, and this could be another stock, right? Then you can do this again down here and set up different assets. So you can set this up in a way so that, or you can look at S&P 500 up here, and then this is the Dow, and this is the NASDAQ, and this is the Russell, and I don't know, something else, right? Or the FANGs. And you can look at other assets in here that are similar to your, they all line up on a 9, or if the 9s happened on those assets a day earlier or a day later. So it's a really neat feature. So we call this cross asset 9s, and we call this cross time frame 9s. And this is another feature that just shows you all of the, because you can't display more than one countdown below the candles. So this is really, really neat stuff that we are working on, because I do want to make sure that the TD sequential, sequential, as I like to call it, because it changes, is significantly better, like 10 times better than the free versions that are out there. And this is the goal, right? This is the update. And everyone that has the current sequential will get this update for free, obviously. All right, guys, I'm done. If you want to support, please check out the YouTube channel for a quick TLDR on what I said. The weekly, I am neutral, and I am starting on a daily. This is a full-blown short trade right now. On the daily, you had a red 2 below a red 1 going below a significant moving average. So the daily is bearish. The weekly is still neutral. That's it. And the stock market, I am still bullish, but I would not be long. So if that makes sense. All right. That's it for me. Thank you so much for watching. I will see you all on the next one, guys. Bye.